G'day, Binanceans, and welcome to this week's Binance Beach. This week, we're going to be doing a dive into the Aussie crypto landscape. We're going to be asking how many Aussies actually own crypto, how we compare to other jurisdictions, how many Aussies could be on the sideline waiting to buy in soon, and of course, where the next wave of local crypto adoption could come from. Joining me today to break it all down, we have Jonothan Inglis from Protocol Theory. Mate, thanks so much for jumping on the show.
Pleasure to be here. Thanks for the invite, Liam.
So before we jump into answering all of those questions, do you want to give me a bit of a brief overview of who you are, who Protocol Theory is, and why you're qualified to answer some of these?
Sure. I hope I'm qualified. So my name's Jonathan. I'm the founder and managing director of Protocol Theory. So we are a market research and consumer insights company specializing in Web3, AI, and emerging tech. So what that means is we work with leading crypto brands, crypto companies, Web3 companies to basically help them understand their audience, understand users, consumers, and markets. And we help them turn that understanding into competitive advantage, right? So we help them understand the needs of users, the needs of consumers, where are the opportunities in the markets. We help them size markets, how many people are on the sidelines, as you mentioned, and kind of what could we provide them that might pull them back into the market and ultimately uptake our product or service. And so we work with these types of companies to help improve their their marketing effectiveness and ultimately onboard more users on chain and into their ecosystem.
And what kind of research techniques do you use to inform these strategies?
Ooh, really good question. How long do we have on this podcast again? No, we use a mix. We use a mixture of techniques. Broadly speaking, there's two types of techniques that we use, right? So there's what we call qualitative techniques, and then there's what we call quantitative techniques. Quantitative is predominantly survey-based methodology. So our whole thing is it's the primacy of the consumer. It's the importance of user centricity. So what we do is we actually go out and talk to them, right? When we have questions about the market, what people might be thinking, feeling, what kind of products they're looking for, or what what they need from Web3 products and services. The best source of truth for those questions is the end users themselves. So we go out and we talk to them. We do surveys. Large-scale surveys. As an example, we recently published a report with CoinDesk, something late last year. In that particular piece of work, we surveyed over 4,000. I think it was 4,200 consumers in 10 markets across Asia Pacific, as one example, right? And so we asked them a bunch of questions about what they think and feel and whatnot around digital assets and emerging tech generally. And so that's kind of the quantitative side. It's predominantly survey-based methodologies. Again, within that, there's a whole lot of different methods that we can use, conjoints and max diffs and all kinds of fancy stuff. And then on the qualitative side, that's everything from actual like depth, what we call depth interviews, where we will sit down for an hour with somebody and really unpack their psychology around these products and services and what really drives them, really trying to get underneath the surface to really understand what's driving their decision-making processes. But also things like user testing. So we'll actually, get people to get hands-on with products, apps, and get them to get into the ecosystem and tell us what their pain points are and how they would evaluate the onboarding experience, for example. So we do a lot of that sort of work. So that's kind of broadly the two pillars: quantitative and qualitative. But within those categories, there's many different types of techniques that we use. We also do sometimes complement that research, that primary research, with what we call secondary research, which is kind of publicly available information. So, blockchain analytics, for example, right? That can also provide some insight in terms of what people are doing and why they might be doing that. So it's really a mix, and it really depends ultimately on what the question is and what we're trying to find out about people.
I mean, the takeaway there is it's pretty comprehensive. So I'm really keen to hear a little bit more about the Aussie crypto landscape and particularly what's driving current investment from Aussie users, and then what could drive that next wave. I think getting into the psychographics of that is fascinating. But let's get started. Where are we at with crypto adoption in Australia?
Where are we at with crypto adoption? Not as much as we would all like to see. No, we're actually, broadly speaking, relatively strong on the global perspective. So crypto adoption, you'll see a lot of statistics get thrown around. You always need to be careful to take a lot of these stats on face value because they're very sensitive to timing. For example, prevailing market sentiment can significantly change adoption statistics, but also things like the underlying methodology, where did that data come from, how was, if it was a survey-based method, what was the question that actually, how did they measure and capture that adoption metric through the questionnaire? So there's it's very sensitive to a lot of the inputs. So you've got to be careful to take these numbers on face value. But from a sort of a best practice approach that we adopt at Protocol Theory, sort of evidence-based market research, our best estimate currently at this stage is about 19.4%. It's give or take, right? So if it does fluctuate. So in the last 12 months, for example, crypto adoption in Australia, we're talking amongst the general population, has varied anywhere between about 16% to up to 22%, thereabouts. That's kind of, it varies based on sentiment. Our best estimate currently is about 19.4%, plus or minus about 1.1%, right? So I say plus or minus because there's always a bit of measurement error when we go out and get this data. So realistically, it's probably anywhere from sort of about 18% to 20%, give or take. That's currently. Where do we stand? Like, how does that stack up, right? Compared to developing markets, the US, for example, the UK, we're pretty comparable, if not maybe marginally higher than some of these other markets, particularly the UK. The US is very comparable to Australia, around about the 20% mark. But when you look at some other markets, particularly in APAC, Asia Pacific, our rate of adoption is actually considerably lower than many of these other markets, particularly developing markets, right? So when we look at, for example, I mentioned the CoinDesk report, this is where a lot of this data will come from. When you look at markets, for example, like Vietnam or Indonesia or Thailand, even Dubai, right? A lot of these countries, crypto adoption is anywhere on the order of like 25% to even as high as 40% in the instance of Thailand. So, on a global scale, we sort of punch above our weight, so to speak. But there's certain markets, particularly in APAC, that comfortably exceed us in terms of overall adoption.
And I'd be fascinated to jump into where that comes from, right? Because I think in Australia we have a very strong culture of investment, right? We love our property investment in this country. Like we have super, which means most people have some exposure to stocks, to equities. And generally, I think that there's a strong culture of investment across all generations, right? And that's what I would theorize, probably drives a lot of Australian general like investment behavior across all sectors of potential, capital allocation, is that mindset, that culture that we love to allocate capital in Australia. We're generally like a high GDP country. We're generally fairly well paid. We have disposable income. And so, we do spend it. We do invest it. We also gamble a fair bit, but I'm not sure where we would sit on the gambling ladder globally, but that does seem to be a little bit of our culture too. And so we generally have this mix, I think, of disposable income and aptitude for delayed gratification and investing those funds and looking for a return. But then when you think about what's driving markets, particularly across broader Asia, you've got these elements of severe currency devaluation or currency debasement. You've got a really significant demand for dollars, particularly in developing markets where, there's a really strong like fear element to those decisions where it's not necessarily about, making long-term investments that are like, 5, 10, 20 years. It's about holding US dollars, and stable coins are such a fast, easy and cheap way to do that. So yeah, I'd love your analysis on what's driving that crypto behavior in Australia and whether I'm on the money with some of those points. Why are we holding crypto?
Yeah, you're absolutely. I think you're broadly on the money there. The other thing is that you didn't highlight there, though, is that Australians in general are quite financially savvy, again, relative to global standards. We have disposable income. We're quite, there is with the superannuation system, for example, we all kind of by virtue of this being over the age of 18 and having a job, we all have some investment asset in our superannuation, and so we're generally fairly engaged, with our kind of our everyday finances, and we have a pretty good banking system here in Australia as well, notwithstanding the oligopoly that exists with the big four, but on objective measures of financial literacy, we perform again quite highly on a global standard. So what's driving it? There's a few things. There's really no escaping the primary driver of crypto adoption in Australia is, like most markets, which is just financial gains, right? That's kind of what brings most people into the market initially. So when we've done research on this, we've surveyed thousands of Australians, everyday Australians, about what were their motivations for getting into crypto. Around about 60%, give or take, indicate that the main reason, the primary reason, was to seek financial returns. But there is more nuance to it than that, right? There's actually quite a bit more nuance to it than that, because why crypto? Why not stocks and shares? Why not ETFs and bonds, etc.? And obviously, Aussies are investing in these other asset classes as well, but crypto offers unique advantages that these other asset classes don't have. For example, a sizable majority of crypto investors here in Australia, crypto users that already they are already invested in crypto. I think it's about 60 to 70% or so believe that crypto offers diversification benefits for their portfolio, right? So that's a unique benefit that crypto can provide, because it's to some extent decoupled from other or uncorrelated to traditional asset classes. So it provides additional diversification benefits. There's also just the unique advantages that blockchain-based assets can provide, i.e., self-custody, censorship resistance, all this sort of stuff, and the ability to have full economic sovereignty of your assets. So there's other unique advantages that crypto can provide, but the overwhelming primary reason people get into the market is for investment returns. But underneath that, there is some additional nuance as well. There are other use cases that we're seeing emerge in amongst crypto users, and uniquely to Australia, for example. A lot of people are actually, in fact, getting into crypto as a savings vehicle, because they're tired of getting 0.1% interest in their savings account, and so they're increasingly turning to crypto as a way to help them build wealth over time, to ultimately get into the property ladder, for example. Right, we're seeing quite a bit of that and have for some time. So that's something that is fairly uniquely Australian that we're seeing, as well as we see a similar trend in New Zealand as well. So there's these very specific use cases that we do see sort of emerging, that's driving behavior here in Australia.
Yeah, that checks out. I think, speaking to my successful friends and contacts who aren't in crypto, who are in, particularly like real estate or commercial stuff, or who run businesses, the story that I hear from those guys who have capital to allocate, who are successful business people, successful, capital allocators, is like, I just can't ignore this asset class. Like, Bitcoin has just done too well to be ignored. And so I know for a lot of them, it's exactly that point. It's diversifying into crypto because they're like, man, I can't just watch this keep being the best performing asset in history or of the decade or whatever, and just let it pass me by. Like, I need to have some kind of level of engagement and level of learning. But then what's cool is to, sometimes sit with those people and help them use the tools, like teach them how this stuff works. And I have this one moment with one of my good friends where I was showing him how stablecoins work, and we were using just a hot wallet to transfer stablecoins back and forth. And for him, that moment where it clicked, where he went from not understanding how this stuff works and then to seeing that how quickly stablecoins went back and forth and how cheaply, and he was like, oh man, no wonder the banks don't like this stuff. Like, this works so well. It's so fast. It's so easy. And so, like, that's the point of entry. And then there's some learning, and there's the rabbit hole that you can go down from there.
Exactly. Yeah, exactly right. And that's what we see, right? So I mentioned that it's the the promise of financial rewards that kind of lures people in the first place, but then it's these other benefits that people start to discover as they immerse themselves in the ecosystem. You mentioned the instantaneous nature of your stablecoin transfers and low fees, etc. Australians are generally pretty happy with with the everyday banking system here in Australia and their financial system, the financial system that we do have here. But there are pockets of frustration and pain points, and one of those is fees from the big four banks. Justified or not, it's something that a lot of Australians feel quite strongly about, and we get very frustrated that we think the banks are largely exorbitant or unfair and unjustified in the charging us for every other thing. And so we do see some use cases whereby Australians are increasingly adopting crypto actually for their everyday banking in order to avoid fees or reduce fees, and also to access and be able to transfer and make payments, etc. Essentially 24/7. Right, crypto is not bound to the traditional 9 to 5 Monday through Friday banking hours, right? For example, so we do see a little bit of that as well.
Yeah, and I guess, right, like these are the core value propositions of crypto and of Bitcoin. And so it does make sense that these are what is driving user behavior. And that's really encouraging and positive to hear when it solves real world problems for people and they use it because it's magnitudes better, faster, cheaper, rather than just as a vehicle for speculation, which I know there's plenty of that too. And there is in any kind of emerging market, but it's really nice to see crypto solving problems for people like it solves problems for me. So that's really cool.
100%.
What's holding more Aussies back from stepping into crypto, from allocating to Bitcoin or from using stable coins to, take and make payments? What's holding us back from more crypto adoption in Australia?
It's such an interesting question, right? When we ask people directly, what do you think, Liam, if I can put it back to you, what do you think is the primary reason that prevents people from getting into crypto in Australia? If you were to
I
ask
think
them directly.
I think the number one thing is education, right? Like this is a new realm of technology, finance, economics. Like to wrap your head around Bitcoin is something that takes a considerable amount of time and effort and energy. I feel like I'm still learning new things about Bitcoin every day, and Bitcoin's a big focus area for my study. And it's something that I'm still learning about, 5-6 years into my journey. And so for me, that's probably still a major barrier. And then I also think there's this obsession we have with property in this country as this golden investment, this thing you must have. And I know for a lot of my friends and people in my generation, my age group, like that's the focus. That's what is driving people's financial decisions is how do I buy a house? How do I create some financial certainty and financial security for myself? And for some people, like crypto becomes a solution to that. But for a lot of people, like that's just the focus. That's what they think about. And then at the moment, too, we have this cost of living, cost of energy, cost of groceries, cost of everything crisis. That means people are feeling a lot tighter. Belts are tightening, budgets are tight. And so I think maybe that disposable income element, too, is holding people back a little bit. And then finally, of course, the fiat rails being able to easily and seamlessly move money from fiat to crypto is still something that we don't really have. It's we have banking restrictions on deposits to crypto exchanges, and that does really make it difficult and means that there's a pretty significant learning or barrier to entry to actually move funds from fiat to crypto. That's the hard part. Once you're in crypto, then it's really easy to use if you know what you're doing. So those would be my guesses. That'd be my thesis for what's holding people back.
I think you broadly nailed it there. The existence of, I guess, substitutes. Nice one. The existence of substitutes in property investment, right, and our really strong culture, almost infatuation with property in Australia is definitely something that we see, as well as the more recently cost of living crisis is absolutely I don't know if it's so much holding people back as a deliberate choice, as much as they just simply don't have the surplus cash to go
Yeah,
and
it's a distraction.
speculate on meme coins. Yeah, exactly. But it's an interesting one because so if you were to ask other people, if you were to ask someone from the general population, why do you think other people don't invest in crypto? They'll often say, lack of regulation, or it's like they see it as too risky, it's full of scammy, or something along that genre. But when you ask people directly, why wouldn't you? What's preventing you from getting into crypto? The response we get is lack of understanding and education, exactly as you said. So when we've gone out and asked this question of thousands of everyday Australians, around about anywhere from 40 to 50% would indicate it's a lack of education, lack of understanding. They don't know how, or they don't understand enough about crypto and blockchain technology generally to feel comfortable getting into this space. About a third don't know how to get started or how to store assets. So if they were to get in and buy crypto, they don't actually know what to do with it, right? So when we ask directly, that's typically the answer that we get. What's interesting about that though is I don't know about you, Liam, but I feel that there's no shortage of companies like Binance and many others have done a really great job in terms of putting out information to help educate people around what crypto is, what blockchain is, and bring that education to people. So the information is out there, right? It's available with just a Google search. So the question is, when we ask people directly and they say, I don't understand it, it's a lack of education, can we really rely on that? Is that really the reason why they're not getting into the space? And the answer is probably not, actually. There's something beneath the surface. There's actually something deeper that's going on there. And so in market research, by the way, this gets into what we call explicit questioning and implicit questioning. When you explicitly ask somebody a question, often the answer you get is not necessarily the true underlying reason. And that's because they don't often have access to the subconscious drivers of what's really driving their behavior. So we have to use workaround techniques to get the what we call implicit techniques to get the real reason. When we've done this, to really try to unpack this a little bit further, what it turns out is to some extent it is a lack of understanding and a lack of education, right? But again, the information's out there if they want it. So why are they not seeking it? Why are they not going out and educating themselves in the first place, right? And the reason is for those that are yet to get into crypto, and they don't quite know enough about this space yet, they simply don't perceive a strong enough reason to. That's really the main reason. And so that really comes down to two things. There's a perceived lack of utility, which, by the way, we can sit here and obviously debate. We just spoke about some use cases and what people are using crypto for. So there's definitely a perception gap in terms of what people think about crypto and the reality of crypto and how people are actually using it. But there's a perceived lack of utility around, well, it's just, magic internet money, right? What does it really do? I can't really use it for anything. It's not real. It's not tangible. So there's that sort of perception. But then on the investment side, where we've explored this, they don't perceive an attractive risk-return trade-off, right? So they understand that it's an investment. They understand that some people have made a lot of money on Bitcoin, but on a risk-reward sort of ratio, right? So like finance 101, right? If you increase if you want to achieve a greater return, you have to achieve a greater level or you have to expose yourself to a greater level of risk. And so when you plot various assets on like a grid, on like a chart, in terms of like risk versus reward perceptions, crypto is like, it's just way off the map in terms of they see it as much more disproportionately risky relative to the return that they would expect to get, right? So if you were looking at an investment asset like Bitcoin and you believe, yeah, maybe I can get a decent return from this investment asset, but the risk I have to take in order to expose myself to that, to achieve that level of return is far greater than what I would expect given that level of return. It's not going to be an attractive trade-off for you, right? So you'll just stick to stocks and shares and property and that sort of thing. So again, if you ask people directly, it's education, it's understanding, and to some extent that may be true, but the information is out there. So really the reason that's actually holding them back from educating themselves in the first place or engaging with that educational information is a perceived lack of relative value, both from a utility perspective and what they can do with crypto and its use cases, but also just a perceived unattractive risk-reward ratio relative to other investment classes.
So much to unpack there. I have this little anecdote of a friend, and I was explaining what stablecoins are, and I was like, "So there's cool things called stablecoins, and you can just send them in seconds to anyone." And she was like, "I can do that with Oscar. Why is
Yeah,
it big whoop? Like, what's
yeah.
that?" And I was like, "Well, you could send it overseas." And she's like, "No, I don't send money overseas." Oh, okay. Like, and so yeah, to touch on your point around that, like bleeding need, some people have it, and I think potentially more financially savvy people have it. Like, if you're looking for certain, yield or stable coins, X, Y, Z, like you can go looking for these little problem solvers. But for the most part, like Osco and our suite of financial products are pretty good. So that definitely checks out.
And
Um,
this is why, by the way, we do see much higher rates of crypto adoption in emerging markets and developing
mm,
markets. Is because often they don't have access to the same level of sophisticated banking infrastructure that we
mm,
have in a very wealthy country like Australia, right? So they don't have access necessarily to the same suite of products and services that we have, and so they're turning to crypto in these markets as solutions to meet those needs that they
mm,
otherwise would not have access to, right? But in a country like Australia, where we do have a very well built out financial services infrastructure and ecosystem, we've got Pay ID, we've got Osco, we've got a bunch of different solutions that do facilitate things like instantaneous transactions. The value proposition for crypto is perceived as there's other available substitutes and alternatives that are, I guess, more familiar to people. And
mm.
so it's not to say that crypto doesn't have, but it obviously does have unique advantages and use cases. But the challenge is to get people to understand those benefits.
Mm.
And I think at this point, there's still a job to be done in order to.
Yeah. And if you're a high agency young person in Australia, you're probably renovating and flipping a house, right? Like there's
Mm,
I heard this on a potty the other day, and it really struck with me. The promise of Bitcoin was to be your own bank, but being your own bank is a fair bit of work when you think about self custody and custody solutions and educating yourself, learn that stuff. Like there's a fair bit that goes into it, and there's I think still like a relatively high level of perceived risk through all that activity. And even if you have a compound annual growth rate of 55%, 50% on Bitcoin, you got to weather those 50, 30%, 80% drawdowns, right? That risk reward is not there. And then you look at the other, primary investment vehicle in this country, and the one that the media pushes as a primary narrative, and we love to talk about. Like, it feels like every other coffee I have with normal people, it's so hard to avoid the topic of property as an
mm,
investment vehicle. And you hear these stories about people making 100, 200, 500 grand on flips, and particularly through COVID, like, that was that was the everything bubble, and everything was going up, but particularly for property, that was just incredible.
mm,
And there's
mm,
just such a consensus view on property in Australia that it is going up, it's only going up, and that it's the path to financial freedom, the path to financial security, and the path to wealth. And we even seem to idolize people who embody that and who have used that strategy to gain wealth and to gain financial freedom. And like we have so many companies that focus on that, right? Like I've just come back to my hometown, and I was walking around little coastal town, right? And there's a little square of shops that make up the main kind of promenade down here. And I was going for a walk around that little promenade, and it's probably like a 400 or 500 meter walk. There might be like 100 shops or something in this little beachside complex, right? And without fail, the nicest shops, the newest, the most well fitted out, the shiny windows, the brand new furniture with the well dressed, fancy looking people in them, without exception, are the real estate agents, the buyer's agents. Like it's just our culture. We just love it. Like we can't get over it. And so, if you're talking about what is a consensus play, what is a low risk, high return investment, everybody in this country just says property. Nobody says Bitcoin. It's such a non-consensus bet still, I
yeah.
think, for the mainstream.
Yeah, you're spot on. The the real advantage that crypto does offer, I mean, several, but one of the key advantages that crypto does offer relative to property is elephant in the room is just the barrier to entry, right? So that's all well and good for property, but if you can afford it, right? Obviously, with crypto, it's a far more accessible asset, and I think that's something that particularly younger Australians are increasingly kind of realizing that, hey, there's this other investment opportunity over here that's also provides some pretty compelling returns, and maybe this is a way for me to to overcome those barriers to entry into the property market. So they're turning to it for that reason. But that is one of the key advantages of crypto is you can buy crypto with as little as $10, right? I should also, by the way, just go back and preface the or add to my comment about the risk return trade off with crypto, right? So although Aussies don't perceive the risk reward ratio for crypto to be particularly attractive, again, they see it as much riskier than what they would expect relative to the return that they expect to get from it. But when you actually look at this objectively, because there's objective data on this, you just get the volatility of Bitcoin and you look at the annualized return of Bitcoin. When you look at that objectively on the actual data, it's quite the opposite. Crypto is actually far exceeds and outperforms traditional asset classes in terms of risk reward ratio. So I think it was Fidelity Investments put out a report on this in the last 6-12 months. And they did that analysis and it was in a whole other stratosphere on its own. So again, there's a huge perception gap there. There's a lot of perception gaps in crypto. That's one of them, is that it's far riskier than the reward that they would expect, the investment return they would expect to receive. But that is completely contrary to the actual evidence in the data that suggests, no, this is actually, it's got an incredibly attractive risk reward ratio over the long term.
Maybe we just need some mainstream media headlines about how OnlyFans stars are buying Bitcoin and the whole thing would turn around. We'd have an incredible tailwind.
I'm sure that'll be great PR for crypto. Yeah, for sure.
Let's finish with, a key takeaway for your average Aussie crypto investor. What should be their takeaways from this conversation? What should they know right now about the Australian investing landscape?
What should they know about the Australian investment landscape? Look, if you're in crypto now, if you're an Australian consumer, you're in crypto, I'm sorry to use an industry trope, but it is true. We are still early, right? Only 1 in 5 in Australia currently own crypto or thereabouts. Globally, it's much lower. So there is still 80% of Australians do not currently hold crypto, right? That is compared to close to 100% for superannuation. There is significant opportunity for more Aussie investors to come into this space. So we are still relatively early. You are early. There are a lot of Aussies sitting waiting on the sidelines, whether it's cost of living pressures, whether it's a lack of comfort, lack of understanding and education, as we spoke about, risk reward perceptions. Nonetheless, there is a lot of Aussies sitting on the sidelines. They're interested in crypto. We don't reject as a nation. We don't reject crypto. We're open to it and we're warming to it, and there's a lot of interest. I think our last estimate was anywhere between sort of 8 to 10 million Aussies are open to investing in crypto in the future. So there is we believe still a significant wave of crypto Aussie crypto investors to come into the market. They're just waiting for the right opportunity and the right nudges to do that. So it's an exciting time to be in the crypto space anywhere, really, globally. But in Australia, particularly, we've got all the infrastructure is there. We've got a well-developed economy, a well-developed financial services system. I think we're going to start to see increasing TradFi integration with the crypto space. AMP recently, I think it was in December last year, formally announced that they'd put Bitcoin into some of their retirement portfolios. I think we're going to see more of that. And so again, that's just going to further legitimize and legitimize the asset class and continue to grow adoption in this country. So it's exciting. If you're in, you're early. If you're not, there's never a bad time to get in.
Nice bullish note to finish off on. Jono, thanks so much for jumping on. Great to share some of your insights. And you guys published some really great research pieces too. So keep an eye out for those. Have a fantastic long weekend. Happy Easter.
You too, mate. Appreciate it. Catch you later.
Cool. Have a fantastic weekend to you as well, Binansians. As always, please make sure that you like and subscribe and tell us who you'd love to have on the show. If you like more research stuff like this, please let us know. We'll catch you on the other side. Bye. Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice.